Hey guys, what's going on? Just coming out to another video here. So tomorrow is, well, I'm making this Tuesday night. So tomorrow's gonna be Wednesday morning. So this is something really important we have to keep in mind with the market. But before I get into that, make sure you like, subscribe, comment below. I wanted to get 300 subs by last Sunday. I think we're gonna hit it today though. So just hit the subscribe button and like button, much appreciated. I really wanna get ideally to 500 soon, so the next couple weeks. So you guys help me get that goal. I might do something a little special. So without further ado, let me get into this. So the market is about to tank. So that's what I'm going to make this title, and this is why. I know I've been making a couple videos in the past week or so about how I think a correction's coming. One, you could arguably happened a couple weeks ago when most of the growth stocks in the NASDAQ dipped down from anywhere from 8 to like 20%, but they really kind of bounced right back. So I do think the market tank's a little harsh. I think it's going to correct. And I think before it was just like a little taste of it, then it bounced back, but now it's going to do like a step down. So I think it's going to go lower than what it did 2 weeks ago. That's just my opinion. I think it's starting now. We'll see if I'm right or not. So some of the reasons why I think this is happening is I made a video about treasury bonds a couple days ago, but treasury bonds are one of the main reasons. So the interest rates on treasury bonds, if you don't know, it's based on supply and demand. So basically they'll keep the price go up until there's a lot of buyers, and then it kind of goes down. So it's basically a supply and demand thing. Right now, the rate is at 1.75. So that's a 14 or 15 month high. So they're at all-time highs right now. So people are taking their money out of the market, so when the rates go up in treasury bonds, it hurts the stock market. I think they're going to continue to keep going up, and that's not helping the market stay stable where it's at now, especially with all the valuations. If you run most of the numbers, they're just ridiculous. So that is not helping, and that's why I think the market is going to correct. One of the reasons. Two, I don't know where I wrote money. Money gets printed, and obviously the more money that gets printed, the more products are going to cost. So that goes as far as food, materials, steel, groceries, you name it. Like anything you buy on a regular basis, iPhones, chips, gaming consoles, TVs, so you name it, the more money gets printed, obviously the more products are going to go up basically. So obviously trillions of dollars due to the feds have poured into the market in the past year. Was what, 2.1 trillion, then like 1.4 trillion, then now 1.9 trillion. So that's like $5 trillion poured into the economy, into the economy in the past year. So you have to remember, like, a lot of people are just saving this money or putting it into the market, or they're not really spending it. Now, some people are, absolutely, because if you look at the earnings from last year, some of these numbers crushed revenue, EPS, and all that stuff, so you have to remember that trillions of dollars poured into the market, or into the economy, and a lot of it's not being spent. But I do think over the next couple years, I do think it's going to trickle into the economy one way or another. So you have to remember that. I think people are coming to realize, like, oh my God, like there's so much money out there, and it's not even really all being spent right now. Some of it is, yes, but not all of it. So you have to keep that in mind. The government said in January that they predicted inflation being 1.5% this year. I thought that was nuts. I thought that was crazy. I think that's partially why the market ran so heavy in January and the beginning of February, because they heard this news. They're like, oh my God, there's no inflation. Like, this is great. The past couple of years, you've been 2 to 2.5% inflation consistently before the crazy thing that happened last year. So that's just nuts. I can't believe people bought this. So like, that's crazy. Now they're saying it's going to be around 2.6%. So you're 3 months later, and it already went up over a whole percentage in inflation this year. That's what they're predicting. So I think that's closer to what it's at, but I still think that's very low. I think realistically, when the year ends, when all this money's moving around, most of it's being spent, I guarantee you the inflation this year will be anywhere from 3.5 to 4% this year. I guarantee you. And I think people aren't really buying what the Fed's saying. I mean, if you like, people ride off what is posted online, but if you really look at the numbers and you put things together and don't just look at metrics like what the federal government does, if you just do like real life, go around, real like go to, you know, I went to Costco last weekend and it was so crowded, I almost left the store without buying anything. So people have money and people are spending. The stimulus checks just came out, obviously, but I think the federal government is very wrong with inflation. And the reason I think they're doing that, they might actually know. I just think they're not trying to scare people. So what they're trying to do is they're trying to slowly like not make the market crash or panic. So let's just say they started here, 1.5, now it's 2.5, in a couple months they're saying, oh, we see it being 3, but really in reality, I bet you it's close to 3, 5, 4%. So just because of all the money printed. So another thing is they also said, the Fed said APR rates are going to stay, interest rates are going to stay really low this year and for 2022 and maybe into 2023. I don't buy that either because, I mean, I think the market's going to bounce back with the vaccine. It's going to bounce back a lot, or the economy, just the world in general with the vaccine being readily available in the next couple of months. I think the economy is going to bounce back a lot quicker than what people think. Well, at least what the federal government thinks. So they're saying it's going to stay low, which is, you know, obviously good for like the housing market and, you know, people that want to invest in things because, I mean, money is basically free at this point. I think rates are going to go up a lot in the back half of this year and early 2022. That's my opinion. That's also bad for the market. So, you know, the reason I think that is, I just said the market, I think the vaccine's it's gonna help and make the economy go all around again. But if you look at like interest rates, even in mortgages, 6 months ago, like a good fixed 30 was like 2.5 to like 2.8, right? Now the rates are at like 3.0 to like 3.3. So I think they're saying they're gonna stay low, but like they already went up a half a point, almost a point. So like that's a big difference when you're talking about a mortgage and big loans. So I don't see what they're really saying, and I think they're going to continue to go up. I bet you they're 3.5 to 3.6, which is like normal levels pre whatever happened last year. So I really think they're just not saying what's really going to happen, and there could be a lot of reasons why they're doing that. But I hope you guys understand what I just said. I know I wasn't like super clear on certain things, but hopefully you guys understand the gist. Like treasury bonds, they're going up, bad for the market. You know, obviously with trillions of dollars poured into the economy that's not spent, that's not good either for the market. A lot of money, more products go up, not good for the market. Inflation, not good for the market. Don't believe low APRs, not good for the market. So like all these things are just not good for the stock market. So just be careful when you come to buying things. I haven't bought anything in the past 2 weeks. I'm just staying patient. I did buy, obviously, when it had that correction like about a month ago at this point. So I was buying then. But I do think things are going to come down. And if things are good deals, I'll make videos on what I buy and why, and what my cost base is, and what percentage of I bought in my position. So that's all I got. Make sure you like, subscribe, comment below. Let's try to get 300 subs. Peace.